Thanks for joining us here on a Monday. I'm Marlon Bowling with you. I hope you're having a great start to the week. And we are going to take a look at what to expect in our grain and livestock trade to kick things off in this full trading week as we get closer to the end of the month of July here. And I want to bring in a little expert help to help analyze the overnight developments in the markets as you get ready for our daytime session today. Let's talk with Jim McCormick of Allendale Incorporated. He is based in McHenry, Illinois. Let's go to the phones right now. And Jim, thank you for joining us. I was teasing you as we were coming on the air here that you probably drew the short stick to talk about the markets this morning. It sounds like there isn't a whole lot of very pleasant stuff to talk with producers about today.
Yes, yeah, good morning. Thank you for having me on. Yeah, it's a little bit of a bummer Monday, plain and simple, to see corn down 8 and beans down about 20 cents. I think it's a little bit more than the trade a lot of people are anticipating, including myself. We did get some decent rains over the weekend in parts of Iowa, parts of Illinois, but there's a good chunk of Iowa and central southern Illinois that have missed the rains, and I think the market may be getting a little bit in front of its skis a little bit in the fact that thinking this crop is made.
So on the soybeans, of course, we were talking about the fact that, yeah, we did have some heavy rainfall. In fact, I'm hearing this morning some folks were saying they have heard reports of 7 to 10 inches of rain again this past week in parts of the eastern half or northeastern half of the Corn Belt. That's not the story in the West, though, and a lot of areas still suffering. In fact, some areas, if they missed out on the rain, it's getting to be fairly dire out there.
Yeah, it is, and like I said, that's why I'm a little bit surprised the market hit it so hard. I can verify we have customers who are reporting the 6, 7 inch rainfalls. I mean, it is swamping their fields. The beans are struggling under way too much water pressure. Their rot is a huge problem. Then you go to the Western Belt, corn pollinated in some extreme heat and extreme warm temperatures overnight, and we know by historical look at the numbers. When we have hot nights and hot days, the corn just doesn't pollinate. So we do look for these yields to drop when the government actually gets in and looks in the fields here in August and September. That's
a very good point you bring up. And in fact, over the weekend, I talked with one of my relatives out there in the Great Plains area, the central Great Plains, and they said the heat index was 115. So corn doesn't like it that hot. That's incredibly hot, and it does make it really hard to pollinate. And in fact, I do remember a year, Jim, when the ears only pollinated, or there was a bare strip on one side because the silks actually got scorched from the sun. It was so hot. We may hear tales like that this year. I don't know. I did want to point out, Jim, we have one little nugget of good news on the corn market this morning. It was an overnight export sale. Just came across the wire just as I was walking in the studio. USDA reported 135,000 tons of corn, and it was sold to unknown destinations for the current marketing year. So at least we have something positive to talk about for the market there.
Well, that's what we want to keep an eye on. I mean, we know we've got a supply out there. We've got a lot of excess from old crop coming in there. The best thing we can see is demand. And the one thing that's probably working in the big picture, the trade kind of forgets about, except for when they're looking for something else to talk about, is the U.S. dollar. The U.S. dollar is bouncing back a little bit today, but in general, it's been in a grind lower for the last couple of months, and that hopefully will keep us competitive on the world stage and keep pushing some of this corn off our shores onto someone else's and, draw down our stocks, which is what we want to see to get the prices to rally.
I just want to give our listeners and viewers an example of what took place overnight. If we can take a look at our corn market, you'll see we have been trading roughly about 8 cents lower as we came into work this morning. If we can pull that up on the screen here. Right now on the Globex market, these would be your last trades on the corn. On September, down 8 1/4, as I mentioned. December also 8 1/4 lower. On the soybean trade, as Jim was mentioning, they're really getting after it. November soybeans down 20 this morning at 10.02 1/4. We'll see how the daytime session opens up here in about 12 minutes or so from right now. On the other hand, Jim, we have a lot to talk about when it comes to the livestock trade today. We had some very surprising numbers in the USDA reports Friday afternoon. If you missed it, we'll cover it in just a moment. We're back talking with Jim McCormick of Allendale Incorporated. This time we're going to focus on the livestock sector. And when the traders went home Friday, Jim, the cattle complex on the futures trade was higher all across the board. Everything closed higher last Friday. Then they went home and they were anticipating USDA's cattle on feed report that was going to come out at 2 p.m. Central Time on Friday. combined with the cattle inventory report. That's a semi-annual report that also takes into account all the cattle and calves out in the nation's pasture and rangeland as well, a total cow herd picture, if you will. And when the numbers came out, let's run through the cattle on feed numbers first. Remember, we went into this report with a bullish spin at the end of the trading session. All right, on the cattle on feed numbers, here's a closer look. We had the on-feed, well, this is actually, this is not the right screen. I'll read them here. The on-feed number as of July 1st was actually 104%. The placements number as of June was an amazing 116%. When that number came out, the average trade guess was 106.2. And also on the marketings number, we had a total of 104% that came out. And the trade was looking for a total of 104.7%. That placements number just leapt off the page. 10% higher than what the average trade guess was here, Jim. And I know everybody I've talked to so far was just shocked at that high of a number.
Yeah, you could put us included in that. I got to think this is probably one of the biggest misses the industry's had from where they thought it was going to be to where it came in at. And it's probably going to be reflected on the opening. I've heard anywhere from $1 to $2 weaker opening is the anticipation, just basically on this placement number. Now, the one thing to remember, these numbers have been getting bigger throughout the year, so I guess it shouldn't be a complete shock they got bigger, just the size of it. But yeah, plain and simple, the cattlemen place a whole heck of a lot of cattle. Now, the other thing kind of interesting, we did have an inventory report. A lot of people might have noticed when they looked at the numbers, we were talking off air, that there was no number comparable from last year, which is kind of interesting, but this has happened twice now. It happened last year, and it also happened in July of 2013, where they did not issue this inventory report due to budget constraints, plain and simple. So when the government's budgets get cut, something gets cut, and interesting enough, it's been this cattle report the last couple of years off and on.
Yes, with the all cattle and calves as of, well, this year versus 2015, now that was up 4%, and the calf crop versus last year was said to be 103%, up 3% from a year ago. The calf crop versus 2015 was 6% higher than 2015. And again, you said that there was a gap in the report here a year ago on the cattle inventory report, right?
That's correct. They did not issue one for July 2016, so we're essentially comparing it a year out, and that's kind of skewing the numbers a little bit. I mean, the fact of the matter is we have the largest cattle herd we've had in the last 9 years. So we got plenty of beef, and that looks like that herd is expanding, not contracting, most definitely.
We did have a fairly active cash cattle trade on Friday, but the prices at that time were fairly steady with the previous week. It'll be interesting to see what develops today. Real quick thought here, Jim, in 20 seconds, if you can, on the lean hog trade here today. It closed weaker Friday. Will they follow through on that today?
I think they're going to follow through on that today. It was a week close technically below the 100-day moving average. That's not a good sign. And then fundamentally, they're going to look at this cattle market. If it gets hit hard, you got beef competing with pork. The beef market goes down. It's probably going to pull the pork market as well lower.
All right. Well, thank you, Jim, for explaining all that. Tough job, but you did a great job at it. Thank you very much. Jim McCormick of Allendale Incorporated in McHenry, Illinois. We'll be hearing more from the Allendale folks as we go through the show.
All right. Thank you very much, Marlon.